What is good, everyone? So today is another backtesting day. I was kind of hesitant to give you this one because I was like, how will I be giving you videos every single day? I mean, that would be too much. But anyways, I don't know how I found myself addicted to this thing, so let's get it done. Great. So I was currently in a small trade trying to see if the standard deviation can work on corrective moves. I did it on Euro USD, and you can see the trade here, so I think I'm just going to close it off of here. Not going to let it run more. What I've noted is that we've got these resistance zones right here between 2 and 2.5, which means my trade should have gotten off somewhere in this zone, somewhere right here. Yeah, somewhere in between here. And I can say it was a good trade, but let's push it and see if it will reach the level 4. Just keep in mind that there's too much liquidity resting in here, so we wouldn't be surprised if we sweep it out. So we're about to start London session, and maybe in London session we can reach that high. You can see we dropped a little bit. Look on the 5-minute. You can see that we took out these lows. We've got our shift, and this is where we would like to take an entry, maybe to target here. That will be like an entry for the next day, literally, because it is drop. Okay, and maybe let's see if we can have an entry like this one for the day in London. So why isn't it reaching that level? We also don't know. It hasn't reached the 4 level yet, which means there's still something wrong about standard deviations. But even though we were swept out, we can see that we've gathered buy side liquidity right here. The thing I hate about this backtesting platform, it's actually nice and the best, but because that's the one I can afford. But the thing I hate about it is that we cannot save templates. I don't know if on other platforms we do it, but on TradingView, well, you can use your templates. And so let me change this, like to put it buy side liquidity. What does this do? Okay, so you can see buy side liquidity right here. And let's remove these trades. Actually, this one, let's remove this 50. So this one I had marked out was the 2 to 2.5. So you can remove it now. So what would we be anticipating on Euro USD on this day? It's currently 22nd March, Wednesday, and we're in London session. So we have our London high coinciding with the buy side, and when we go to the 4-hour, you can see that we have a bullish bias, and currently the market was in a corrective move, tracing to a fair value gap here, as you can see it right in here, and we might like to see New York push it higher. So it continued dropping and showing signs of indecision. When I go to the 1 hour, you can see it starting to react, trying to go higher. Okay, so we go to 30 minutes now. As you can see, we have started now our push to the upside. And we have got an entry, and we have a perfect entry that would have cashed in right here, as you can see it. So, sorry. On the 15-minute, which is the time frame I usually enter on these forex pairs, you can see that we have a fair value gap right here, and on New York Open it retested it and then pushed higher to take out this buy side. So our entry would have looked something like this. We put this under the low right here, and to perfect it we can actually go on the 5-minute and put this under this low, enter right on this candle and target here, and you can see it's a really good trade. Didn't take long and was a clean trade. Let's see if it would have taken just 1 hour. Nice trade to take out this buy side, and as you can see, for now buy side has been taken out. So let's tape read price and see where it goes. 30 minutes now. So now price starts dropping a bit, so I think this we have finished using these levels now, because fair value gap has been retraced to even the internal one, but we also have a small one right here which might also be a potential zone, considering that we have sell side, and sell side also on another low right here. So this is an important low. This one right here is a really important low, so we would like to mark it as sell side, which would be the potential liquidity market will target as it drops. So let's see if we get an entry off in here. Okay, so it's dropping, and let's go to the 5-minute now. So we can see a healthy retracement to a fair value gap, but we might wait for a clear shift. But since we have swept out of the liquidity and we have this market shift in here, it's a internal market shift, because on the external, which is like on the 1 hour or 2 hour, it wouldn't have been a shift yet. So we can have an MSS here, right? One MSS, fair value gap retested, and our entry would be trying to target some lows, the London low, because we also have it right here. This is the London low, so our short entry would look something like this: London low, stop loss above the first candle of the fair value gap, so it would be somewhere right here. So high risk trade, since we are bullish, we have a bullish narrative, even though the bias is starting to look bearish. So quick stop out, but we see we still have a bearish bias, so we can take another short as well and target lower, because you see we have another fair value gap in here. So let's see if we can have another shot at it right here, target this low. Now it's taking long because now the short session has ended, the New York session has ended, and it doesn't want to drop to that level, but in the end we can see it's about to reach there. Trade took longer than expected. Let's see what happens at the start of London. 3, 2, yep, nothing big happened. Okay, you can see the move right here, London open move, and as it consolidates, we might try to analyze what will happen at the start of New York. And at last our TP gets hit, our sell side liquidity one gets taken out, this one. So you can see that, yeah, right here. So what do we learn from this is that we took this trade and we had a tight stop loss. You can see it was almost at the same level we took it. Second thing that we would learn from this trade is maybe we would like to wait for a retracement to an order block which is in a higher premium zone if we're looking to sell. Because if we take our fib retracement, trace it from this high to this low, you can see that instead of taking a trade in here below the discount zone, I don't know if you're seeing this well, but let me zoom it in. Yeah, so as you can see, we have market shift and our zones are right here, so the 0.5 is in here. So taking a trade in the discount, we were selling low, which is inadvisable. So we would have waited for it to reach at least in this level, the premium, and then look to sell off. A trade off in here would have been better because we would have a stop loss in here which wouldn't have been hit, and target would have been reached instead of getting a loss. So yes, that was a good one. Let's go now to the 1 hour and try to grasp how it's moving now. So you can see we've grabbed our first liquidity right here before the start of New York, and when you go to the 2 hour, you can see that we dropped down to that fair value gap as well. But my anticipation would be that market would continue tanking and dropping, at least take out this low or drop onto this order block right here, because since this fair value gap has been retraced, so then it's no longer valid. So let's mark up the start of New York. So New York starts somewhere here. New York open. Oh, something's wrong with this. So New York open right here. So let's see. Let's take read price and see. As you can see, it's dropping. And as soon as New York opens, does a small drop and a small consolidation. It's a Thursday. Okay. Really big consolidation. We can see it right here. So maybe what I would expect is this to show us a power of 3 and maybe try to go higher or lower. We can't just see if you can take a trade in this movement right here. But you can see that this level was strong. This order block right here was a strong one. Market failed to break past it. So it looks like this. There were no entries on Thursday, no opportunities provided. So go to the 15-minute. Right here, you can see that market kept ranging. Well, we predicted it to drop because we had some liquidity levels below, and it worked out, but it was still ranging. As you can see, ranging. Small big move, ranges. Small downwards move, I mean. Okay, so now let's go to the lower time frame and see what's happening right here. It's currently Friday. This is the London open move. So at 2 right here, you can see that we've got a London open move in here, and we have another liquidity points of some these relative equal lows. Can mark out liquidity the New York open. So you can see the open of New York, we dropped a bit. Okay, so what can we see right here? You can see we had a high, a sweep, and then this high was also swept out, which might this might be the false move. Because to determine the standard deviation, you use the false move. So if we were to trade off the standard deviation, we'll do something like this. So to this high, so we'll be targeting these levels down here. So we have the 4 level right here, and our resistance level of 2 to 2.5 in here. Just remove this and go to the 5 minute. Do we have an entry? We can enter somewhere in here after the market shift, because you can see here we've got the market shift. The only entry criteria we get on from the standard deviation strategy or model is that we should enter after the market shift. So let's play this one and see. Crazy rejection at the start of the weekend. Boom. And this would actually let us take another trade. So you can see we're stopped out, but you can have a trade entering where we would feel this volume imbalance. So I had to remove that because I wanted to see this volume imbalance well. Let's see this volume imbalance. So market drops into it. What time is still Sunday? Might expect it to start to drop by the start of Monday, maybe at 2. So we've got liquidity generated right here, equal highs. Markets ranging. Our drop started right now. 5 minute. We've got a shift in structure. Retest, small one. And let's take a sell. put the stop loss right here, and we'll be targeting somewhere. Let's target the midpoint actually. So the midpoint will be somewhere here, which is where our TP actually is. So let's see if it drops to that point. Stops us out. I know this setup is valid. By the time 9:30, by the time of New York open, 9:30, we have to drop. Let's take another sell entry. I don't know why I'm over trading on on the backtesting session, but this is a valid entry, man. It's a valid entry. Still doesn't want to reach the volume imbalance. Doesn't want to drop. Maybe if there were some news, it would have pushed it lower and lower until it touches the TP. It's making small moves for real. I don't know what's wrong, but when it drops, it will be a crazy one. Let's see. At this point, we've even started another day. So isn't playing then. Come on. Okay. It drops. Then it goes higher again. It's been a day already, man. Look at this range again right here. Doesn't want to drop still, which it has to. At least reach this midpoint, then we continue with the narrative bias. And still there, like a standard deviation. How does this work? Trust. It's not this one. Okay. TP hit after a year, I guess. How long does this trade take? 1 day, 3 hours and 30 minutes. Crazy one. So throwing off of a volume imbalance, it's really crazy. So let's keep on backtesting the strategy. So far, I've backtested the FVG retracement models, the breaker blocks together with the fair value gap, the standard deviation models. Let's keep on backtesting and find the one that aligns with what we want to do. Anyway, so nice session. Keep on pushing. You have to make it. And until we talk again, Lord willing, be safe.